Hello, guys, and welcome to your show. This is this is November 2nd, 2018. And listen, glad to have you guys here. Now, listen, let's get the show started. Let's open up the charts right here, and let's get right into cryptocurrency right now. Let's got to close the chart down a little bit and get the right size here. What we're looking at right here is a price of $63.58. We've had a little bit of heating up in the cryptocurrency market over the last 24 hours or so. A little bit of energy coming back in a positive way into the cryptocurrency space. And we're seeing it right now, right this second. If we're take a look at the 1 minute chart right here, and we see it, it's moving upwards just a little bit, but slowly. But it's definitely going upwards right now this morning. Now let's take a look at cryptocurrency market capitalizations today, and what we're seeing is 205 billion, with a Bitcoin dominance of 53.6%. When we see quite a few of these coins starting to shift over and go into the green today, so that's a positive sign for cryptocurrency today. I'll tell you, I think there's a solid floor underneath this market right now at around $6,000, unless something drastic happens like a stock market crash. Okay? If we get a stock market crash, then all bets are off with cryptocurrency. It could go, it very possibly could go down big time. But there is another possibility that people could actually run to it, but I tend to think it would go down if we get a stock market crash, because stock market crash is what really creates a lot of fear. And I'll tell you, there's a little bit of fear in the markets right now, a little bit more than there was. They're a little bit apprehensive. They're starting to get. It's starting to shake them up a little bit, the fact that we're getting these big drops in the stock market. Okay, let's take a look at the silver price today. We're looking at the silver price making gains. Yesterday, it made some pretty good little gains back from that smash that they did. And it actually gained about maybe a couple pennies even higher than the smash. And it's holding it today. It's holding these gains. $14.74. And I think that it's great that it's actually holding the gains that it made. Silver and gold both have actually had an awfully hard time in the last few years. Let's take a look at the gold chart today. What we're seeing is gold is trying to hold its gains. It's had a little dip, but $1.90, but I think it's trying to hold its gains again at $1,231 today. Now let's take a look at the U.S. bond market, because that's the big story of the day today. Bond yields are climbing back faster than I thought they would. I knew they were going to climb back. I told you guys that the bond yields were going to creep back. But I said creep back. I didn't think that they would explode back. And so far, they've been moving back higher, the bond yields. Look at the U.S. 10-year. It's already back up to 3.174. It's dropped. It's risen like 10 basis points in just the last couple days since the market fell. This does not bode well. This is rising faster than I thought. Now, I believe right now that we're in the last run-up in the stock market before the big crash. And the big question mark is, how long is this run-up going to last? Listen, the alarm bells should be going off right now. For people, while the stock market's running up, the alarm bells should be going off. This could actually happen at any time. The crash now at this point. Now that we're up to 3.17 on the U.S. 10-year, which is relatively close to 3.25. I mean, you can't split hairs when you're trying to judge the economic system. You can only come close sometimes to judging when it's going to happen. And at 3.17, it's actually close enough to my 3.25 where I can say, hey, you know what? 3.25, 3.17. It's getting in that territory, you know. A crash could happen anytime now. And we're in the, I believe right now, we're in the final run-up. The alarm bells should be going off for everybody out there, but nobody. They're not. They're like, oh, this is wonderful. Oh, this is great. We're showing the jobs increases and earnings are going up and blah, blah, blah. You know? And they think that we're in la-la land. You know, when the system is over-leveraged. I mean, it's this leveraging cycle of the system. Going back to Greenspan, when they had little leverages, what they do is leverage the system, and try to deleverage, and then they leverage it again. And each time they got to leverage it a bit more than the time before. This leveraging is linked to the way the system is geared. The system is geared for exponential growth. This planet, and I've been saying this for ages, what caused the 2008 crisis, how the exponential growth, the world couldn't keep up. The world is finite. And honest to God, this exponential growth the whole thing is geared that way, the financial system, going back to when the Fed was created. It was created and designed that way. And what's happened is the whole world started to shrink in 2008. And they kept up with the growth by making growth in the financial system. And so what they do is they leverage up the financial system, and then after a while the financial system deleverages itself, which is its natural process, but they stop it halfway before it's able to fully deleverage. And they re-leverage it again. And they've been doing this over and over again. Each time they re-leverage, they have to re-leverage that much bigger and bolder and brighter. This time, it's got to the point now where the system is so leveraged, it's going to take so much deleveraging that it's going to be unbelievable. You can't keep up. It's going to cause a hyperinflation. Anyway, that being said, what time is it? 10:22. It's 8 minutes until the stock market opens up right now. I get it at 10:30. I get my first stock market information of the day. But I know that we're in the run-up right now, leading to the crash. And so everybody should be unaware of this. Now, let's take a look at the U.S. dollar index real quick here. 96.26. I'll tell you what I'm going to do today. I'm going to do my stock market report, but I'm going to do it before it opens because, to me, this is like opening up when the stock market opens up, it's going to be like opening up a gift at Christmas time. You know what I mean? Today, I mean, we could actually see some sort of a drop today. But I believe the stock market is in its final run-up. How high will it go, and how long will this last run-up last? I've said before that this stock market run-up could actually quite literally create a new high. It's because people are unbelievably stupid. Okay, just joking about that, you know, but that's why the stock market would make a new high. Okay, so let's take a look. What do we got here? Oil price. Oh, this is a big story right here in itself. And we're missing it all because this has everything to do with the price of oil. Look at it. It's fallen like a stone. It's down to $63.44. Unbelievable. This supports the dollar, by the way. When we see the oil price drop like this supports the dollar because it means your dollar can buy more oil. And that's the biggest thing, the most important thing that the dollar buys. Oil. Because this is an oil-based economy. That's why it's called a petrodollar. And honest to God, we've took a tremendous drop in the price of oil. This means your dollar can buy a lot more oil. This means your dollar is going to go up, or is staying up, or is going to stay strong as long as the price of oil stays cheap like this. Saudis control the price of oil. I think the Saudis lately have been sending signals. They're like, hey, you know what? They're sending signals out there that they ain't gonna take anything much. I mean, the Saudis are really upset right now, and the United States is really upset at them, and it's all got to do with this big thing that's going on right now. with Saudi Arabia. I've done some programs on that and stuff anyway. I'm not going to get into it on this particular show. I better hurry if I'm going to take a look at the stock market before she opens. Maybe I'll talk about it a little bit. Here we go. Here's the stock market right here, and this is today's at close. 25,380 at close, and she was up 264 points yesterday. I totally believe that what we're seeing right now, this little surge up, we take a little bit closer look at it. We're on the 2-year right now. Let's take a look at the 1 year. We can see this little surge up at the end here. I believe this is the last run-up. And this last run-up, depending on how much energy it has in it, we see volumes have increased slightly. We see that on the last run-up in the stock market before that fall, that the volumes fell off for a long time here. Okay, the fall-off in volumes started around June 25th, and the fall-offs in volume stayed up until the 10th, what's that, October 10th. And ever since October 10th, the volumes have been increasing a little bit. So we've started another little run-up here in the stock market. So we've had a fall-off in the stock market in January in 2018, and a big fall. That one frightened everybody. Then what we've had is we had a run-up, and then we've had another fall that frightened everybody, and now seemingly this one's ending and another run-up is beginning. When this next fall comes, it's just like the old thing about the villagers, you know. They sent the kid out to cry wolf, you know, to spot the wolf and stuff. And that old story, do you remember how it went? They sent the kid out next to the village, and they sat him there, and he was going to watch to make sure the wolf didn't come. So he was a bad kid, and he cried wolf when there wasn't any wolf. Wolf, wolf, and the whole village come running out with their pitchforks to try to kill the wolf. And they looked around, there's no wolf there. And so they were all mad at the kid. They said, "Why did you cry wolf for?" You know? And he said, "I don't know, I was just having fun." So they all went back home mad. And then he did it again, a second time. He cried, "Wolf, wolf!" And then all the villagers come running out with their pitchforks, and there wasn't any wolf again. The same old deal. And then they all went back mad. So the third time happened. And the wolf really did come into the field. There was a wolf there and everything. And he yelled, "Wolf, wolf!" And nobody come. Nobody. Right? That's the way this market. We have this first fall back in January, and it got everybody upset and stuff. And this next fall, it just happened, and it got everybody upset and stuff. But people are starting to get used to it, see? So we're going to get another one. So we got a run-up right now, and we're going to get another one. And the next one, they're going to say, "Hey, you know what? It's just another one of these. We've had 2 of them before." And they're going to start to actually buy back in and stuff after, because they're used to actually buying on the dip. And these run-ups, the stock market actually goes up as high as it did before. And so they're used to trying to make money still on these dips and stuff. They're not frightened anymore. This next one coming, they're really not going to be frightened, because they're just going to think it's just another one of these correction things, you know, that they've had several of them now. So it's just going to be another one. It's not going to be a big deal, you know. But what the next one that's coming, and we're in the run-up for it right now, they're going to think it's another correction, but it's not. It's not, guys. It's not. It's going to do the same thing as the correction. It's going to fall back down where the stock market is probably going to hit lows of about 23,500 or something. And they're going to think, okay, it's time for it to go back up again. It ain't going to go back up. It's going to bounce a little bit, maybe just a little bit. And it's going to fall. It's going to be a big fall. And that's when everybody's going to be shook up and scared, you know. And that's when she's coming now, and it's not long. Let me see what time it is. 10:29. Honest to God. We're going to come back to take a look at the stock market in just a minute, but we're going to run over right now and take a look at this article over at Zero Hedge. Why American consumers are about to be blindsided by an inflationary shockwave. And this is true. But what's going to happen is we're going to have a very little tiny little short period of deflation first. And then we're going to be blindsided by an inflationary shockwave. This is true. So they can see the inflation is going to be coming. There's no other way for this to go. Because what happens is we're in this cycle now that cannot be broken of leveraging and deleveraging the system. Well, actually, they don't deleverage the system. The system, the tendency is for it to deleverage all on its own in these events that occur, like stock market crash and so on. This deleverages the system. They never let the deleveraging complete itself. This is where the problem is. They come in and then they re-leverage the system. And this just keeps on going, and each time it's exponentially bigger what they need to do. And so that's what's going to happen this time. The system's going to start to deleverage. It's going to shake them all up, and then they're going to re-leverage it. And that's when we're going to get this consumer inflation that we're going to be blindsided with that they're talking about here on Zero Hedge. It's coming. And also, when this next wave of consumer inflation comes, this inflationary shock wave that's coming next time, this is going to be what really makes gold, silver, and the cryptocurrencies. And right now, all three of those are suffering, and the people that own them have been suffering with them. They have to be the most long-suffering people on earth that's been battered. But I'm going to tell you, you only incur your losses in those three things, gold, silver, and cryptocurrencies, if you sell. As long as you stay stubborn and HODL all three of them, these other guys can't win, because in the end it's going to be an inflationary shock wave. And when that hits, that's going to be the making point for gold, silver, and cryptocurrencies. So hang in there, guys. Well, let's go back to the stock market. And let's take a look and see what's going on today. Let's refresh the page. As of market open, it's up 123 points again today. And like I say, this is the run-up. We're in the run-up. Volumes are up a little bit. We're in the run-up on the stock market. How long will this continue? I think it has everything to do with the bond rate, especially the U.S. 10-year. So we got to watch that 10-year. Listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye-bye, guys.